Hi everyone, it's Jack back with another video, and today I want to talk about Enphase Energy, an American energy technology company that produces solar microinverters, battery energy storage and EV charging stations, mostly for residential use. It's been one of the best companies to hold since its IPO. It's up over 6,000%. It was up even more. It's right near its 52-week lows right now, and it's making new 52-week lows pretty much every day. The stock has plummeted since its highs at the end of last year, 58%, and I think it's down even more today. Still, stock has a very promising future at just 20 billion market cap, with effectively endless total addressable market across many of its solutions. There's a lot to be excited about here, so let's get a bit deeper into what Enphase does, and then I'll talk about how I think it's valued, how they're performing, etc. Enphase makes the majority of its money from microinverters. It was the first company to successfully commercialise solar microinverters, which a microinverter just converts the direct current power generated by a solar panel into the grid-compatible alternating current for use in residential use or for export back into the grid. Microinverters are still relatively new to this market, occupy a relatively small share of the whole market versus the more traditional string inverters. Now, with a string inverter, the panels are connected together in series, which creates a string, and it delivers all direct current produced, and then it goes into a final inverter for conversion into the grid-compatible or AC current. The obvious drawback to this approach is that the entire string's output can have a rate limit in step by the output of its lowest performing panel. Solar microinverters address this problem because they convert DC into AC in much smaller inverters located behind each individual panel. It's essentially a more modular approach that eliminates the inherent weakness of having them in series, and that's by getting rid of the series. Despite being a relatively young company, only founded in 2006, it has grew rapidly. Obviously, the stock price has appreciated enormously, but the revenue is not far behind. This is not an extremely overvalued stock. Revenue of $2.3 billion. It is cash flow positive and is recording cash flow from operations in 2022 of just shy of $750 million. It shipped nearly 70 million microinverters, has 3.5 million systems installed in more than 145 countries. They have 1,500 installer network in their Enphase installer network. Extremely impressive growth that has really scaled into one of the largest players in this industry. It has a 50% share of home installs in the United States, and it has just kind of exploded out of nowhere and took the market by storm. Commercializing and growing the market for microinverters is a very nice business. It's been a very nice business for Enphase and will continue to be a very nice segment of this business. And it would create a multi-billion-dollar company. But Enphase clearly has greater goals and wants to become a general energy company, and that is what has really impressed me and why I've really took note of this company, because to be honest, it kind of passed me by on its run-up in 2019, 2020 and 2021 because I just thought it was extremely undervalued. But now, looking at its plan in the future and how it's going to essentially grab more dollars in each home, massively increase its total addressable market, I'm so on board with this company's vision. In 2019, for example, the IQ family of microinverters had a potential of around $2,000 per home. When they include their IQ battery storage system, they're adding another $7,000 for an Enphase potential of around $9,000, with a slight increase in the microinverters. In 2022 and beyond, they're expecting premium backup for sunlight, their next generation microinverters, the IQ battery, plus IQ load control, electric vehicle chargers, fuel cells, grid services, software. Their total addressable market per home is potentially $12,000. They have 50% install base in the US for home installs, and a lot of the US is going to have to go eventually to these type of renewable energies. This is a huge potential for Enphase, and there's not really any other players that are doing this on this scale in the residential market. Of course, there is a lot of competitors in each individual ones. There's a lot of competitors in EV charging, but they're making great strides there. But in solar panels, them and SolarEdge are pretty much the only names for residential properties, and I really, really like what Enphase is doing here. Obviously, this is and sounds like a fantastic business, so why is the stock down greater than 50% in the last 6 months? Really, it's that the tailwinds from 2021 2021 and 2022 are slowing down, and like many business, they've been really hit hard by industry-wide pain caused by the macroeconomic environment, particularly interest rate rises. The forward-looking outlook for this business looks significantly tougher than it has done for the past few years. You can see for Q4 2022 to Q1 2023 and Q2 2023, the quarter-over-quarter revenue numbers are essentially flat, actually declined a little bit. The year-over-year numbers are still reasonably strong, but quarter-over-quarter is really what we need to be looking at here, because the forward-looking outlook continuing on quarter-on-quarter basis is not looking that good. Minimal revenue growth. And this industry-wide pain, because of the interest rate rises, is driven by these sort of projects, solar infrastructure projects, are driven by debt. They are debt laden, so from a commercial standpoint, that is slowing down. And also from a residential standpoint, there's just a pinch on everyone's pockets at the minute. There's not so much in the US, slightly in the US because of massive interest rate rises, but in other countries like the UK, for example, have been even larger interest rate rises, and that has put the consumer in a pinch and is unlikely to spend on things that aren't deemed essential. Policy changes in California have also made things tougher. It's one of the business' largest markets. Well, it is the largest market in the US. And in the short to medium term, these policy changes aren't going to hurt. In the long term, the transition to solar energy is happening, whether people like it or not, and Enphase is surely to benefit from this. This chart perhaps shows it a bit better. Again, from 2021 to 2022, this business did absolutely fantastic. Cash flow from operations more than doubled. Revenue almost doubled, up from around 1.4 billion to 2.3 billion. Absolutely excellent. But you can see in Q1 23 and Q2 23, they did just over $700 million in revenue. That's looking like it's going to continue going forward for the rest of the year, if not declining a little bit. So best case scenario, they're looking around $2.7 billion to $2.8 billion. That's just not the sort of growth that is required from this company's valuation when it was trading at 70 times earnings or so. That's just not going to fly for a company that is trading at that size of earnings. You have to continue delivering. When you trade at a valuation premium like that, you're going to get stung if you can't live up to it, and that is broadly what's happening for this business. Now the valuations came down to much more sensible levels. You can see 2019, 2020, 2021, enormous price to earnings ratios on a trailing basis. Price to cash flow is even very, very large. Although they were growing like a weed, but even still probably not to justify these sort of earnings. However, this year, price to earnings ratio on a trailing basis around 35, forward basis around 30, for 15-20% growth. One could justify this, certainly. I would argue it's still slightly overvalued, but I'm really, really interested in this business. You look at the cash flow numbers, around 21 times cash flow. Obviously, comparing with the 5-year numbers are not going to do much because this is a dramatically different business outlook going forward. But in terms of valuation, this is the cheapest it's been for a long time. I would argue it should be as cheap as this right now. But with a little more coming off this, I will be very, very interested in this business. That's really the summary here. I think this business's tough outlook are going to put a lot of pressure on valuation coming forward. It's already dropped from the 140 you can see on the screen to around 135 today. You can see it continuing to go down as interest rates continue to take up even slightly. The Fed did not put a pause on recently. I think this is going to continue to hurt Enphase's forward-looking guidance. And one thing I am concerned about is that the competitors in the solar market, the technology changes at such a rapid pace. Cheaper competitions come out all the time. Enphase has generally phased this off, but they're starting to become the incumbent, particularly in the microinverter market. They're the incumbent. Are they going to be knocked off by an up-and-comer? Who knows? Only time will tell. I don't think Enphase are resting on the laurels by any means, but certainly if this business comes down to, I don't know, close to $100, which I don't think is out of the question by any means, I would be extremely interested in this business. Even around 120, I like the margin of safety a lot more, but $100, I would consider this an absolute bargain for my portfolio. But of course, that's just my opinion. Let me know your opinion in the comments down below. I'm not a financial advisor, so you shouldn't consider this financial advice. Do your own research and due diligence. Of course, always remember your capital is at risk when investing in stocks. With all that being said, like and subscribe and enjoy the video. Comment down below. See you again next time.